Hey everyone, welcome back to Corporate Decoder, the place where we dig deep into the sometimes strange world of corporate filings, reports, and more. And today, we have a report from a family of funds with a twist. Some of these funds are planning to merge into one. We're going to figure out what's going on and whether you should be worried if you're invested in these funds. Buckle up because this could get a little complicated. Today's report covers a whole bunch of funds under the Litman Gregory Funds Trust umbrella, and we're focusing on the annual shareholder reports. It's like a peek behind the curtain to see how these funds performed, what they invested in, and what's coming down the pike. First off, we have a bunch of actively managed exchange-traded funds, or ETFs as they are popularly known. These ETFs all trade on the NYSE Arca. Among them are the Poland Capital China Growth ETF, the Poland Capital Emerging Markets ex-China Growth ETF, and the Poland Capital Global Growth ETF, and Poland Capital International Growth ETF. We will also check on a few mutual funds like the IMGP APA Enhanced Income Municipal Fund, which aims for high tax-exempt income, and the IMGP Alternative Strategies Fund, trying to deliver returns with less risk than the stock market. Plus, we have the IMGP High Income Fund, IMGP Dolan McIntyre Corporate Bond Fund, IMGP Small Company Fund, and one more strategy fund. One of the first things any investor wants to know is, what are the costs? This report breaks down the costs of investing $10,000 in each fund. For example, the IMGP Small Company Fund has an expense ratio of 1.17%, which translates to about $125 in costs for every $10,000 invested. The Poland Capital China Growth ETF is cheaper, at 0.85% or $85 per $10,000. Next, it talks about performance. How did these funds actually do? The IMGP Small Company Fund reported a solid 14.29% gain for the year, outperforming its benchmark, the Russell 2000 Index. What drove that performance? Well, the IMGP Small Company Fund report points to strong stock picks in the industrials, consumer discretionary, and financial sectors. Not all the funds had stellar years. The Poland Capital China Growth ETF reported a gain of 12%, but it lagged behind the MSCI China All Shares Index. Apparently, security selection and how the fund was allocated across different sectors hurt its relative performance late in the year. Drilling down a bit more, we can see that the healthcare, IT, and consumer staples sectors actually dragged down the IMGP Small Company Fund's performance. So even a good year has its bumps. It's important to remember that past performance doesn't guarantee future success. As the report clearly states, the fund's past performance is not a good predictor of the fund's future performance. Let's take a look at some of the financials. For the IMGP Small Company Fund, we see that total net assets were about $49 million. We can also see the fund held 59 individual stock holdings. And its portfolio turnover rate was 149%, which means they traded a lot of stocks during the year. Looking at their top 10 holdings gives us some insights into how they are invested. At the top, you see Excel Service Holdings at 4.3%, Pilosity Holding at 3.7%, and Globin SA also at 3.7%. Flipping over to the Poland Capital China Growth ETF, the top holdings are companies like Tencent Holdings at a whopping 14.2%, Hong Kong Exchanges and Clearing, and Meituan. Checking out the region weightings for the same report, you can see that North America consists of 101.4% and Europe at 3.7%, and then a big cash position at negative 5.1%. This tells us the fund is mostly concentrated in North American companies. These data points are really helpful for understanding where your money is going. Interestingly, the fund changed its primary benchmark on April 29, 2024, from the MSCI USA Small Cap Value Index to the Russell 2000 Index. Why? To meet the SEC's new definition of an appropriate broad-based securities market index. The MSCI USA Small Cap Value Index is now its secondary benchmark. Digging deeper, you will see how fund assets are allocated. For example, the IMGP Small Company Fund is mostly in equity securities of small U.S. companies. In contrast, the IMGP APA Enhanced Income Municipal Fund is primarily invested in U.S. dollar-denominated municipal bonds, which are generally exempt from federal income tax. Different funds, different strategies. And for all funds, the report makes sure to include the disclaimer that the fund's past performance is not a good predictor of the fund's future performance. Now let's talk about changes because there are some big ones. The IMGP Alternative Strategies Fund report has a bold statement. This report describes changes to the fund that occurred during the reporting period. What does this mean? Well, the board approved a plan to reorganize the IMGP Alternative Strategies Fund into the IMGP High Income Fund. They would acquire all assets and take on all debts of the Alternative Strategies Fund to consolidate them into the High Income Fund. Speaking of fees, advisory fees are substantial for the IMGP funds as they are paid across multiple fund strategies and for oversight by IM Global Partner Fund Management. For just the small cap fund, the advisory fees paid were $340,115. Here's where it gets interesting for the IMGP High Income Fund. It also has that bolded, this report describes changes to the fund warning. Then there is a similar sentence about a plan to reorganize and take on assets from the Alternative Strategies Fund. So essentially, the IMGP Alternative Strategies Fund is planning to disappear, merging into the IMGP High Income Fund. The change is expected to occur in Q2 of 2025. But this is not all. The report says that the Poland Capital Emerging Markets ex-China Growth ETF has also had some fund strategy changes. It states, "This report describes changes to the fund that occurred during the reporting period. Let's see what those are." The IMGP Small Company Fund's primary benchmark changed from the MSCI USA Small Cap Value Index to the Russell 2000 Index in order to meet the SEC's new definition of an appropriate broad-based securities market index. And to finish off the changes section, the Poland Capital International Growth ETF was affected too, as the statement here highlights. Advisory fees paid amount $0. It appears that the IMGP had significant fee reductions in the past year. Let's take a look at what the IMGP Alternative Strategies Fund is invested in before the merger. Approximately 72% in fixed income, 19% in equity, and the rest split into other. The top holdings of the Poland Capital Emerging Markets ex-China Growth ETF is Taiwan's semiconductor manufacturing. It sounds very growth-like, if that makes any sense. At the very end of most reports, there are disclaimers, as well as contact details including phone numbers and emails. Switching gears, this SEC filing also dives into some of the behind-the-scenes stuff. It talks about the audit committee financial expert, Harold M. Schefrin, being independent. This is important because it's all about making sure there's no shady business going on with the numbers. There's a section on the fees paid to Cohen and Company, the accounting firm that audits these funds. In 2024, the audit fees were around $300,000, and there were additional fees for tax services. This highlights the audit committee's role in pre-approving all the accounting work. It's like a double-check system to avoid conflicts of interest. Then we get to the juicy part. The Board of Trustees of the fund approved the reorganization of the fund into the High Income Fund. Essentially, one fund is being folded into another. To quickly recap the details I found, the IMGP Alternative Strategies Fund invested in a variety of equity and debt securities. So, what's the big picture here? The Litman Gregory Funds Trust is going through a bit of a transformation. They're consolidating some of their fund offerings, and they are also trying to meet SEC regulations to better serve their investors. Now, based on what we've seen, what do I think of the situation? Overall, the funds seem to be in a stable position. The strong performance of the IMGP Small Company Fund is encouraging, but the underperformance of the Poland Capital China Growth ETF highlights the challenges of investing in specific regions. That being said, keep an eye on expense ratios. A high portfolio turnover can translate to higher expenses and taxes, so I'd keep an eye on that figure over time. The consolidation of the IMGP Alternative Strategies Fund into the High Income Fund could be a good thing, streamlining the investment offerings. However, investors should understand the implications of such a change and make sure the combined fund still aligns with their goals. Overall, there are positive and negative signals. The SEC filing is a good reminder to review the full prospectus for risks. Thanks for watching. If you enjoyed, please subscribe, like, and comment.